Hello everyone! Today, we're diving into a fascinating topic. We will explore how the Japanese yen compares to the US dollar. This comparison is very important. It affects travel, trade, and global investments. Let's break down these two major currencies. The US dollar, or USD, is a very strong global currency. It is often seen as a safe haven. The Japanese yen, or JPY, is also a major player. It is known for its stability at times. The exchange rate tells us how much one currency is worth against the other. Recently, the yen has been quite weak against the dollar. This means that one US dollar can buy many more Japanese yen. There are clear reasons for this trend. A big reason is the difference in interest rates. The US Federal Reserve has been raising its interest rates. Higher US rates make holding dollars more attractive to investors. In contrast, Japan's central bank, the Bank of Japan, has kept its interest rates extremely low. Low Japanese rates make the yen less appealing for some investors. Money tends to move to where it can earn more. This flow of money away from Japan weakens the yen. This currency difference has real impacts. For American tourists visiting Japan, a weak yen is great news. Your dollars stretch much further. Travel, food, and souvenirs become more affordable. For Japanese travelers visiting the US, it's the opposite. Their yen buys less. A trip to the US becomes more expensive. Trade is also heavily affected. A weaker yen makes Japanese exports cheaper for US buyers. This helps Japanese companies sell more cars, electronics, and other goods abroad. However, it makes US imports more expensive for Japan. This can impact Japanese businesses and consumers buying products from the US. Investors also watch these trends closely. A strong dollar can attract investment to the US economy. A weak yen can make Japanese assets seem cheaper for those holding dollars. But investors also face the risk of currency fluctuations. Central bank policies will continue to be key. If the Bank of Japan changes its low-rate policy, the yen could strengthen. If US interest rates stabilize or fall, the dollar might weaken. Global events also play a role. Economic growth in both countries is always a factor. Understanding these dynamics helps us make sense of the global economy. It also impacts our wallets if we travel or invest internationally. Thank you so much for watching today. I hope this explanation was clear and helpful. If you found this information useful, please consider supporting the channel. A like, a share, or subscribing really helps us grow. We truly appreciate your support. See you next time.